Hello. Welcome to Alpha Beta Soup, where we unpack Bitcoin using on-chain analysis. I'm TXMC. The futures market has continued to have its way with the price chart. We'll look at the Bitcoin price chart. We'll also look at the futures market and hop around to various charts on Glassnode Studio to get an idea of what the market is showing us today. But generally, this video will be on the shorter side. Please excuse my voice. I'm feeling a bit hoarse today, so if I sound more scratchy than usual, my apologies. If you enjoy this content, please make sure to subscribe to my channel and give a thumbs up to this video. We're on our way to making the best on-chain and Bitcoin analysis channel on YouTube, and you guys are helping to make it happen. Let's get into it. We'll start off with our price chart here. When we spoke the other day, it was October 25th. We were right around here, and we were wondering if 60,000 would be the floor for this pullback. Well, it wasn't. We broke below it. We tapped 58,000, and now we're back over 60. Put my fibs on here like we've been using. You can see that we got a bounce right at the 786, so that's good. That's encouraging. This is a key level here. After we finally got over it, it's nice to see that it was caught, at least for the time being. I wouldn't want it to go back below this. If we got down to 54,000, that would be more concerning. I really would like it to stay above 57, so hopefully we get that outcome. It's also worth noting that if you put a fib on this pullback here from September, where we are currently is right at the 1.618 golden ratio fib extension level. It's funny how this 618 level comes into play so often on so many different tickers. The math of Fibonacci really is the math of the universe. But anyway, right now price is just hanging out. Not a whole lot to say about the price chart, but it's good that we caught this 786 bounce right here, because if we hadn't caught this, I'd be more concerned about price weakness if we were down in this area today. Here is our futures dashboard. At the top, we have open interest, the value of all open contracts in the futures perpetual market. On the left here, we've got USD dollar terms, and over here in BTC terms. You can see it's still high, it is still elevated, still near all-time highs in the futures perp market. But what I really want to look at today is this funding rate and the liquidations. So in the previous video, we walked through how divergences between price action and the funding rate can result in liquidations by futures traders. Since the 25th, there have been a couple more divergences. When we were filming on the 25th, price was in this area here. Since then, we've seen funding increasing here, funding rising. These are leveraged long traders opening new positions in the futures market. And as this was occurring, price was showing weakness up here, going sideways and down slightly as long traders are stepping in with leverage. And what happens? We get a bit of weakness and some of these guys get flushed out. And if you follow your eyes over here, they are liquidated. You see some spikes on this green chart. These are long liquidations. These are people whose positions were automatically closed by the exchange because their margin costs exceeded the balance in their account. The exchange said, nope, you're too overextended, we're closing you out. Get a few liquidations, funding resets back down to this 0.01% baseline, and we carry on for a few days. And then here on the 28th, price spiked back up and then held flat. And while it was holding steady, we were showing a little bit of weakness here. It's trying to fight back over 60K. And in this moment, what's happening? More leveraged long apes are stepping in and opening more positions. These folks are relentless. It really doesn't matter how strong or weak the price chart looks. They step in with leverage at every opportunity. And what happened again? Somebody got liquidated. As of this morning, funding is still slightly elevated, and that's okay. When funding is positive, it isn't immediately a red flag. It becomes a red flag when we have divergences in price. Funding rising, price sideways to weak. Then we get flushes. Funding rising, price sideways and weak, we get flushes. Right now, with the chain being so quiet, with transaction counts and volumes still being relatively slow, futures outcomes are having an outsized effect on the price. And we'll continue watching it closely as long as we remain in this kind of low volume spot environment. Worth keeping an eye on all the time, but I don't get too carried away about positive funding on its own. It's really about these divergences and when they come into play. In a few videos, we've looked at this coin days destroyed chart. This helps us understand the amount of coin activity and churn going on at different points in the market cycle. When older coins come to life and they are spent, all of the days that they sat dormant get destroyed and added to this line. So if you have a coin that sits dormant for 365 days and then you spend it today, it will destroy 365 coin days on this orange line. The more coins are destroyed and the more days that they have accrued to them, the higher these spikes. We get big spikes in market strength as we're reaching blow-off tops, when we pass previous all-time highs. That's typically when we see elevation in this metric. As more coins are coming to life, older hands are spending into market strength, and there's just generally a lot of activity on the network. We've been observing for the last couple of weeks just how low and quiet this coin days destroyed 90 chart is. Considering that we are back essentially at the all-time high. I know that we're a bit below it, but we're basically there, right? We're at 60,000. The fact that we're all the way back up there on price and the amount of coin days being destroyed is still so low. On the one hand, it's bullish, right? Because it means that older hands are not spending all their coins here. It means they're standing firm. All these people that have been holding Bitcoin for a year or 2 years, who have hundreds or thousands of coin days accrued in their wallet, those people aren't spending them. If they were, we would see them show up here. So in that sense, it's bullish. It's showing confidence. It shows patience, that they're not ready to sell here and they want higher prices. Conversely, from a bearish perspective, there's just seemingly no interest in moving coins here. The fact that this just stays so quiet, it just seems like no one is paying attention to Bitcoin right now. And that might be okay, but it's obvious that retail isn't here yet. And retail is what's really going to drive a parabolic rally like many people in the Bitcoin space are hoping for. That isn't going to happen without a lot of buyers. And right now we don't have any of those. But we also don't have a lot of sellers. So that's why we kind of hang out in these areas, because activity on chain is simply low. There's another version of this chart I want to look at, and it's the entity adjusted version. Here is entity adjusted coin days destroyed. I'll flip over to the other. You can see they're very similar. You see how the line is moving just a bit here as I'm flipping between the charts. This regular coin days destroyed chart is the one we've been looking at. This one is entity adjusted, meaning that any transactions that are involved in self-dealing, someone moving coins from one address to another address that they own, get taken out. And if we look at it in this way, coin days destroyed 90 is at a 10-year low. Yes, a 10-year low. You follow my horizontal line straight across. The last time coin days destroyed in an entity adjusted fashion was this low was in January of 2011. It has been quite low at bear market periods in the past. Here in the depths of the 2015 bear market, we tapped a low. Here in the 2018 capitulation, we tapped a low. We've tapped an even lower low in October of 21, right as we're breaking the all-time high. I want to say that this is bullish. Part of me feels that this is bullish from the perspective of long-term holders, from the perspective of the illiquid supply types, the hodlers, those who don't sell very often. That group remains strong, and this chart is showing that evidence. But on the other hand, it also speaks to very low on-chain activity. That is a bearish factor. So we're in a tricky spot right now with Bitcoin. We're right at high prices. We are just a slight nudge away from price discovery. But we've got this odd on-chain footprint right now of extremely low activity. Will that spike up if we get back up to 64 and 65,000? Possibly. As long as we continue not having large sell pressure, it's certainly possible that we'll just creep our way back up to 66,000 and then all of a sudden retail shows up. But that isn't happening yet. And it's important to keep a realistic, balanced approach to what the market is showing us. Here is our entity's net growth chart with a 7-day moving average to smooth it out. Entity net growth takes the sum of all new entities appearing on chain and subtracts the amount of entities that have disappeared. For an entity to disappear, it must have started the day with a balance of some kind and ended the day with no balance. They clear themselves of all Bitcoin. So that's how we get a net growth value. And it's typically very positive. There's not been a point in Bitcoin's history where we had more people leaving the network than joining. So that's important to point out. But what I noticed this morning was this quick fall in entity net growth here in the middle of October. the algorithms we use to identify entities do need a few days to kind of bake in that data. So when I see a movement on the entity net growth chart, I don't immediately assume it's from that day. It could have happened in the week or two leading up to that day. So when we see this plummet here on entity net growth, which says it was around Thursday, October 14th, it might have been just before that. Let me zoom in some more here. This fall could have been as a result of this action here, which was, in September and the beginning of October. It's hard to say exactly, but the point is that entity net growth is declining. And we got a little spike here, but I'm mildly concerned about this particular chart here. We don't want to see entity net growth bottoming out. We want to see new folks coming to the network each day, discovering Bitcoin, deciding they want to own it, buying, and then not clearing their balance. We want those folks coming every day, and we'd like more of them than the day before. So this is still positive. It's still a few thousand entities showing up each day. It's fallen a lot in the last couple of months, and it's very quiet. This, in combination with this entity adjusted CoinDays destroyed chart, these two charts here are telling a slight bearish story, although we are sitting just under the all-time high. There are many things to be optimistic about, but for some reason, on-chain activity and just general interest in Bitcoin remains extremely low. Bear market low. But we know we're not in a bear market because we just made a new all-time high last week. So there's clearly diverging signals here, and it makes me a little cautious about the next few days, the next week or two, until I start seeing signs of strength. The last chart we'll look at today is our long-term holder profitability chart. So about a month ago, I walked through how this chart worked on the channel, and I'll leave a link to this video in the description if you'd like to go back and check it out. So this red and green line is long-term holder supply. See it here over time. They grow their stacks in bear markets, they distribute into market strength, and then they start accumulating again on the backside. This is the smart money that we follow very closely. The color of the line is based on their profitability. When long-term holders are not in high levels of profit, they are typically accumulating and their stack is growing as price is in a weak spot. And then typically, once their profitability gets to about 2.5 times, is around when they start distributing. And so you'll see the color of the line change to green near where they start distributing. And it seems to be pretty consistent in each market that around 2.5 times their realized value, about 2.5 times profit, is when they start to distribute, which also coincides often with the price being near or about to break the all-time high. You can see here they distributed into market strength in 2017 as we broke the previous all-time high. Here, price started going up. Long-term holders are distributing to new hands. And then once price reaches the peak and begins to roll over, this group starts accumulating again, starts net accumulating. They start the process over again. At some point during this rollover in price, their profitability fell back below that 2.5 threshold we've been using. And that's where the line flips back to red as they're in accumulation mode, buying mode. And what we can see over here in this most recent market is the same thing happened, right? They got up to about 2.5 times profit right as price was breaking the previous all-time high, and they started distributing, and they're now in accumulation again. The thickness of this line, how thick this red and green line is, represents how much of the supply in total is owned by these long-term holders. It's a ratio between long-term holder and short-term holder supply. If we look at this 2015 to 2017 market here, you'll see how this part, when the line is very thick, is also when long-term holders are not in high levels of profit and they are accumulating. Then as they begin to distribute, once they're in profit, their line starts to thin out. They're giving their supply to short-term holders. They're selling it to new hands. The line thins out. Then as it reaches the bottom here, as price is rolling over, they start accumulating and this line starts thickening out again. And it remains very thick. Well, something interesting that I've noticed about this current market is how thick this line has remained throughout the distribution of this year. But what I just find very interesting is that even though we break new highs, we created new highs this year, long-term holders did distribute. They distributed less of their supply. They maintained a larger percentage of the total supply, noted by how thick this line remained during distribution compared to these previous markets. Look how pencil thin it is over here. Look how thin it is here in 2017. Look how thick this line is. Long-term holders distributed less of their coins, stayed in profit the entire time and are now back to all-time highs on their own portion of the supply. Look how this line stayed green this whole time. We never got to a point where their profitability fell back into accumulation zone, where they're less likely to want to sell. And still they sold, and still they remained in profit. So my takeaway from this is that the current long-term holder class is a bit more evolved. They're more patient. There are some of them who have sold, but there are a great many more who have remained in high profit and have not moved their coins despite being given the opportunity. So this paradigm here is evolving a bit. And even as we see their supply flattening some here in the last few days, they still own an extremely large percentage of the total available supply. So while we were just looking at some bearish charts related to on-chain activity and entity growth, this view of long-term holder supply and their standing profitability looks very positive. So the key takeaways for me right now with the market are that Bitcoin has shown some strength in the fact that it broke an all-time high last week, but we've since pulled back and the chain has remained extremely quiet. We didn't see retail stepping in at the all-time high break. It looks like they'll need a bit more coaxing to join this market again. Selling remains very light, profit taking remains a bit sparse, and if we can maintain that environment where there aren't a lot of sellers, there won't be much stopping us from attaining new highs again. We may see long-term holders begin to sell a bit when that happens, but if it's anything like last week, the selling will be muted. I believe that this holder class will not start giving up their coins unless they see real market strength, until they see willing buyers of their coin. And we don't have that right now. Derivatives have continued to play an outsized role, and they will in the future, especially while spot volume is low. Make sure you follow me on Twitter at TXMC Trades. I post regular analysis, and you'll find out about other content I'm releasing that isn't on YouTube. I still strongly believe that we are in the middle of a bull market and that higher prices are ahead, but we're still gathering support underneath the all-time high in preparation for the next leg up. It's important to stay rational, not to get carried away, and whatever you do, don't buy the top. This is not financial advice, and I am not a financial planner. I encourage you to do your own research, and I hope that I am one of your trusted sources. We will speak again soon. Until then, take care of yourselves, friends. Have a great Halloween weekend. Cheers.